What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and it looks like breaking. The Fed just left interest rates unchanged, and Wall Street is not happy. The Nasdaq is slipping as tech stocks take a hit. Nvidia is dragging down the market lower after new export restriction fears, and Fed Chair Jerome Powell just spoke, and markets did not like what they heard. So what's next? What will the Fed cut rates in 2025, or are we stuck in high rate purgatory? Let's break it all down in today's recap. So, all right, no surprise here. The Fed kept rates at 4.25% to 4.5% today, but the biggest market moving moment, the Fed removed this phrase from their statement. Inflation has made progress towards 2%. Instead, they just said inflation remains somewhat elevated. The translation here, the Fed isn't as confident that inflation is under control. And when markets heard that, stocks dropped faster than a nighttime stripper during the night shift. Powell tried to calm markets, calling it just language cleanup, but traders weren't buying it. The Fed isn't promising rate cuts anytime soon, and that's bad news for investors expecting easy money in 2025. So how did the markets react to our news from today? The Nasdaq fell 0.5%. The S&P 500 was down 0.47%. And the Dow Jones dipped 0.3%. Basically, Wall Street was hoping for a more dovish Powell. Instead, he gave them uncertainty, and investors absolutely fucking hate that. Another rough day for Nvidia, though. The stock dropped over 4% after Bloomberg reported that Trump is considering new export restrictions on AI chips, folks. So what's happening here? The Biden administration had already limited chip sales to China. Now the Trump administration might go even harder, like Waka Flocka in the paint, baby. But that means less sales for Nvidia and AI chip companies like AMD. Now the stock reaction here, we had Nvidia drop about 4%. We had AMD drop 2%, and ASML struggling despite strong earnings reports. The takeaway here, Nvidia is still the AI king, but government policies could slow down growth. So let's keep an eye on this, folks. Now, another thing that happened, major tech earnings just dropped, and here's what happened. Meta fell 5% after weak revenue guidance and high spending. IBM popped 11% on strong AI bookings and free cash flow. Tesla dropped 5% after missing margins and earnings expectations. And Microsoft lost 5% as well after its cloud business missed estimates. The key takeaway from today's Sherluffamub, investors aren't rewarding spending on AI anymore. They want to see the profit. They want to see the product, baby. So how should traders position now? What's next? What's next, Max? What's next? Well, if rates stay high, value stocks and dividend plays could outperform. Tech stocks need strong earnings to recover. Let's watch Meta and Microsoft closely over the next couple weeks. And AI isn't dead. But guess what? Nvidia's risk is completely rising. So will Powell keep rates high all year? Is Nvidia in trouble? Go ahead and drop your thoughts below. But also, don't forget, baby, to like and subscribe for more real-time market updates, because this is episode 96. So tune in for the next one, because we're close to 100, and who knows, maybe at episode 100, we have some, special guests, some money to give away. Anyways, I'll see you guys in the next one. I hope you're having a great day. Happy hump day. and I will see you guys at market open tomorrow.